Hello guys, this is CA Balakrishna from Lecturepedia.in. In this video, we will be revising SA 510. In the middle we have SA 505 external confirmation that we will be discussing in the next video. Now in this video we will be revising SA 510 Initial Audit Engagements Opening Balances. Okay, now under this standard, first of all we will understand what is meant by initial audit engagements. See, first of all, there is a company A Limited. Now the financial statements of this company for current year, okay, are being audited by Mr. A. Okay, he is the auditor for the current year financial statements. Now for the previous year, the financial statements of A Limited are audited by, let's say, Mr. C. Now here in the current year for Mr. A, the audit of A Limited will be initial audit engagement. Okay, this is the first case in which the audit will be an initial audit engagement for Mr. A. Second case, now current year Mr. A is auditor, and for previous years the financial statements of A Limited are not audited at all. Okay, not audited. Even in this case also, current year audit of A Limited will be a initial audit engagement for Mr. A. Hope this is clear. Thereby an audit engagement will be called as initial audit engagement if previous year's financial statements are audited by some other auditor, or previous year's financial statements are not at all audited. Okay, in that case the current year audit engagement will be known as initial audit engagement. The same thing I have given here. See, initial audit engagement, prior period financial statements are not audited or were audited by predecessor auditor. Okay, predecessor auditor means the previous auditor. Okay, will be known as predecessor auditor. That is meant by initial audit engagement. Now in relation to this initial audit engagement, the current auditor has to obtain certain audit evidences regarding the opening balances. Okay, the opening balances of current year will be brought forward from the closing balances of the previous year's financial statement. Okay, now in respect of current year, in respect of this initial audit engagement, the auditor has to obtain sufficient and appropriate audit evidences regarding the correctness of this opening balances. Okay, now as per this standard, the auditor will be mainly having two objectives regarding the opening balances. What are they? Objective as per this standard: obtain sufficient and appropriate audit evidence about whether opening balances contain any misstatement that materially affect the current period financial statements. Okay, the auditor has to obtain audit evidences that the opening balances does not contain any material misstatement. Okay, that is the first objective. Second objective, accounting policies reflected in opening balances are consistently applied in the current period. Okay, now the accounting policies that are followed in the previous year must be consistently followed in the current year also. Let's say previous year's closing balance of stock, okay, it is valued as per cost or NRV, whichever is lower. Okay, now previous year's closing balance becomes current year opening balance, and in the current year the stock has been valued, okay, the closing balance of stock and the stock in the current year has been valued at cost. Okay, here in this case, the accounting policies that are reflected in the opening balances are not consistently followed in the current period. Okay, whether there are any such instances of not consistently applying the accounting policies that are reflected in the opening balances. Okay, regarding that, auditor needs to obtain audit evidences. Okay, these are the two main objectives of the auditor as per this SA 510. Now in relation to this, what are the audit procedures that the auditor will perform? Let us see. Okay, in relation to this audit, in relation to this opening balances, okay, in order to obtain audit evidences regarding the opening balances, what are the audit procedures that the auditor will perform? Let us see. As we have discussed in SA 500 that auditor will obtain audit evidences by performing audit procedures. Okay, now here in SA 510, auditor needs to obtain audit evidences regarding opening balances. In order to obtain evidences, he need to perform certain procedures. What are those procedures? Let us see. Firstly, he will read most recent financial statements. Okay, in the most recent financial statements, the closing balances will be present now. Okay, he will read those financial statements. Okay, and he will check whether the closing balances of that financial statements have been correctly brought forward to the current year as opening balances or not. See, determine whether prior period closing balances are correctly brought forward to the current year as opening balance or not. These are the first two audit procedures. Next, determine whether opening balances reflect appropriate accounting policies. See, apart from obtaining audit evidences of whether accounting policies reflected in opening balances are consistently followed in the current year or not, he should also check whether the accounting policies that are reflected in the opening balances are appropriate or not. Okay, even that has to be checked by the auditor, by the current auditor. Next, if let's say prior periods financial statements are audited by some other auditor, okay, in that case, see, prior period financial statements audited by another auditor, in that case, current auditor can obtain audit evidences regarding opening balances by just going through those audited financial statements. Okay, the current auditor can place his reliance, okay, he can rely on the financial statements that are audited by some other auditor. Okay, thereby he can peruse the copies of audited financial statements, and current auditor can place reliance on closing balance in the audited financial statements. Okay, he can place his reliance on the closing balances that are reflected in the previous periods of financial statements, and the same has to be carried forward to the current period as opening balances. In case prior periods financial statements are not audited, okay, see, audit of financial statement is for the first time. In that case, the current auditor has to perform certain additional audit procedures in order to obtain evidences regarding the opening balances, perform other audit procedures to obtain sufficient appropriate audit evidence regarding opening balance. Okay, what are some of the examples regarding such additional audit procedures? Now let's say there are sundry debtors. Okay, there is some closing balance of sundry debtors. Now the auditor has to obtain audit evidences regarding existence and correctness of that amount of sundry debtors. In this case, he can ask for confirmation from that respective debtor. Okay, by the confirmation of that respective debtor, auditor can obtain sufficient appropriate audit evidence regarding the opening balance. Okay, or auditor can also ask for some written representations from the management. Okay, like this, by performing some other audit procedures, auditor needs to obtain audit evidence regarding the opening balances in case the prior periods financial statements are not audited. See, example would be confirmation or management representation, etc. Okay, next, coming to the reporting part. Now let's say auditor has performed these procedures and came to a conclusion that opening balances, okay, or there are certain misstatements in the opening balances. Okay, auditor obtained sufficient appropriate audit evidence and concluded that there are certain misstatements in the opening balances. In that case, what will be the type of opinion that the auditor will give? First of all, he has obtained audit evidence. Okay, thereby he cannot give disclaimer of opinion. Okay, since there is audit evidence, he cannot give disclaimer of opinion. It might be either qualified opinion or adverse opinion. Okay, based on the audit evidence obtained, if the auditor feels that these misstatements in the opening balances are material and pervasive, in that case auditor will give adverse opinion. In case he feels that they are material but not pervasive, in that case he will give qualified opinion. Okay, that is the first case. Now in the second case, auditor is not able to obtain sufficient appropriate audit evidence regarding the opening balances. Here, since he is not able to obtain sufficient appropriate audit evidence, he cannot give adverse opinion. Okay, he can give either qualified opinion or disclaimer of opinion. Okay, now if auditor feels that the misstatements that might be present in the opening balances are both pervasive and material in nature, in that case he will disclaim the opinion. Okay, since there is no sufficient appropriate audit evidence. On the other hand, if the auditor feels that these misstatements, okay, the misstatements that might be present in the opening balances are material but not pervasive in nature, in that case auditor will give qualified opinion. Hope this is clear. Okay, this is regarding opening balances. Okay, this is regarding misstatements in opening balances. Now moving to accounting policies. Now the accounting policies that are reflected in the opening balances are not consistently followed in the current year. Okay, if the auditor concludes that the accounting policies are not consistently followed in the current year, then he has obtained audit evidence. Okay, based on audit evidence only he can conclude that the accounting policies are not consistently followed. Okay, in this case, if the auditor feels that this is both material and pervasive, he will give adverse opinion. In case he feels that it is material but not pervasive, he will give qualified opinion. Okay, here he cannot give disclaimer because he is having audit evidence. Okay, he is having evidence that the accounting policies that are followed are not consistent in nature, thereby he cannot give disclaimer of opinion. Okay, this is entire reporting part. You can see the same here. Audit reporting. Auditor concludes that opening balances contain misstatements and effect is not properly accounted. Okay, auditor concludes means he has obtained sufficient appropriate audit evidence that the opening balances contain misstatements. In that case he will give either qualified or adverse opinion based on the pervasiveness of that misstatement. And also, or accounting policies are not applied consistently. Okay, if auditor has concluded this, it means that he has obtained sufficient appropriate audit evidence. Okay, based on the audit evidence he has obtained, he concluded that accounting policies are not applied consistently. In that case he will give either qualified or adverse based on the pervasiveness of this item. Next, if the auditor is unable to obtain sufficient appropriate audit evidence, okay, if he is not able to obtain audit evidence and he feels that misstatements are both material and pervasive, then he will disclaim the opinion. Okay, on the other hand, if he feels that misstatements are only material but not pervasive, in that case he will give qualified opinion. Okay, this is the reporting aspect. Next, note, let us see. Predecessor auditor's opinion includes a modification. See, auditor has gone, the current auditor has gone through the audit report of predecessor auditor. Okay, that is previous year's auditor, and he found that the previous year's auditor's opinion is modified. Okay, this he found that the previous year's opinion is modified. Now auditor will check in the current year, okay, whether the aspect on which previous year's auditor has modified his opinion has been correctly presented or correctly followed in this current year. Okay, if it is correctly done in this particular year, okay, in this current year, then the auditor will not modify his opinion based on that aspect. In case the current auditor finds that aspect based on which the predecessor auditor has modified his opinion has not been corrected in the current period financial statements also, okay, in the current period also there is same mistake that has been done, okay, there is same type of misstatement. In that case, the current year auditor, okay, the current period auditor will also modify his opinion on the current period financial statements. Hope this is clear. See, remains material and relevant to current period also, okay, in that case he will modify current period opinion also. Okay, by this revision of SF 510 is done. Okay, and in case you wanted to purchase classes regarding paper 4 law and paper 6D economic law, you can visit our website lecturepedia.in and you can purchase from that website. Okay, in the next video we will be revising SF 505.